시청자 여러분 안녕하십니까? 저는 뉴욕 특파원으로 나와 있는 한국경제TV 신인규 기자입니다. 그동안 긴 하락 장세였던 뉴욕 증시 하반기 들어서 조금씩 랠리도 나타나고 있지만 여전히 불안합니다. 어느 때보다 제대로 된 정보와 옳은 분석이 절실한 때입니다. 오늘은 월가의 분석가 출신으로 미국 최고의 주식 정보 기업을 일군 데이비드 잭슨 시킹알파 창업자와 함께 이 변동성이 큰 지금 시장 어떻게 봐야 할지 함께 이야기 나눠보겠습니다. Mr. Jackson, thank you for coming this studio.
Thank you very much for having me. I'm really honored and I'm looking forward to the conversation.
Yeah, do you remember we first met in June video and that was really amazing.
Thank you. Yes,
Okay.
for me as well.
Okay. So Mr. Jackson, first let's talk about investment background, especially for Korean investors. Korean investors who have recently invested in the US market are in some difficult situation. How should they think about this market correction and how concerned should they be?
I think it's always difficult when the stock market goes down for individual investors. And it's very understandable that people are nervous because the market has momentum, and often we see momentum on the way up, and you can also see momentum on the way down.
Right.
I think the most important thing for investors in Korea, as everywhere, is if you're young, the correction in prices is good for you.
Uh-huh.
Because if you're investing as you should be over a long period of time, you can now invest in stocks at somewhere between 20 and 40% cheaper than in the second half of last year. So if your plan is to keep investing over a long period of time, which is certainly what young people should be thinking about, then the market correction is paradoxically really good news for you.
Mm-hmm.
If you are much older and you're retired, for example, and you have all of your money in the stock market or a large amount of your money in the stock market, and you're in the process of selling stocks to pay for your expenses in your life, then the correction is much worse news.
Right.
Because the fact that stocks are cheaper when you're selling them is bad news. If they're cheaper when you're buying them, it's good news. So I think that actually the market correction should leave a lot of people feeling quite optimistic and happy, although that's hard to do psychologically.
Mm-hmm. Right. Then let us ask about some relating question. Actually, as you said, this market is down this year, as you see, and many people think it could fall further because, as you said, there's some investment psychologically, and so should individual investors get out of the market for a while until the picture is more clearer, or with the recent rally, should investors who have been on the sidelines get back into the market?
Right. I think the key question for most investors is, should I be trying to time the market at all? In other words, should I be trying to get in the market when I think it's going to go up and get out of the market when I think it's going to go down? Or should I stay consistently in the market and simply continue to invest in the market? And all academic studies of individual investor performance are completely clear about their results, which is that investors who try to time the market generally perform worse than the market average over long periods of time. And so if you try to say, I'm particularly worried about the market now, so I'm going to get out, and then I'm going to try and get back in when things are good, the academic research suggests that it's very hard to do that as an individual investor and to beat the market. And in fact, what happens in many cases is that the big market moves occur, meaning upwards, occur when many individual investors are out of the market and have decided to be out of the market. I think that one of the problems about trying to time the market is that even if you feel confident about the time to get out of the market, it's very difficult to know when to get in, back in.
Right.
Because most moves off the market bottom are quite sudden. And therefore, it's very unlikely that investors will be able to get back into the market just at the point that the market has bottomed. And then there are all sorts of psychological factors like, the market's already up 10 or 20%. Am I sure I want to get back in now, or am I not sure? And the result is that even if an investor is successful at saying, I want to get out of the market, and you're right, and the market continues to fall, the result can be that you then stay out of the market for 5 years or 10 years, and then you end up doing much worse. So I know this isn't answering the question in terms of, do I think right now is a good time to be in or out of the market? I think that this point is really valuable for most individual investors, which is don't try to time the market. Stay in the market because you'll actually perform better if you do that.
Let's move on to another question. Koreans have invested heavily in US tech stocks, including Tesla. How should we approach these stocks for now? For example, what is the best investment for those who have bought Tesla stock in recent downtrend?
First of all, I think that buying growth stocks, stocks which are very focused on the future, like a company like Tesla, is a really good investing strategy. You have to try to buy the market leaders, and you have to try to buy them at a reasonable valuation. And Tesla is certainly a market leader, and it's a high quality company with real revenues and real earnings, and is arguably in the leadership position in EVs, in electric vehicles, and other areas which it's going into as well. So I think the first thing which I would say is that if you bought Tesla stock, I don't think that you should be, I don't think that market conditions should lead you to try to get in or out. Generally speaking, investors do much better when they buy stocks and try to hold them for long periods of time. Part of the reason is that if you try and trade in and out of stocks, you're much more likely to get stopped out by noise or your own emotions, right? Or panic, for example. So I think that for investors who bought Tesla, they should hold on. Just for example, I think that Tesla's up about 30% in the last month, off the bottom. If you look at the stock, who would have predicted that after the Fed started raising rates, that Tesla stock would rebound by 30% in 1 month? You can't predict this kind of stuff. It's very difficult to predict. So I think that investors who have bought Tesla should hang on to it. Ask yourself, why did you buy Tesla to start with? And have those reasons really changed? And if they haven't changed, then you should continue to hold the stock. At the same time, I think one of the challenges of buying tech stocks is valuation. Tech stocks which are leaders are always expensive. They always look expensive. And then when you look back, they don't look that expensive. Yeah. So for example, if you look at the valuation, for example, the valuation multiples, the earning multiples on stocks like Google and Apple and Amazon in their early days, all of these stocks looked expensive, and they always looked expensive. There were never points where those companies looked much cheaper than other stocks. And so the challenge for tech investors in particular is that your stocks are going to look expensive, but how expensive is too expensive? And that's a real challenge for investors. That's very difficult. I think that where Tesla is right now is it's a leader, and I think the stock is very expensive. So I think it's even now. So I think that that Tesla is actually going to take many years to grow into its valuation, and that introduces some risk. So I think that the final thing that I would say for investors who own Tesla stock is when you buy tech stocks and when you buy leaders, you have to make sure that you're diversified. You don't want to put a really large percentage of your portfolio into a single stock. You want to diversify and either own multiple stocks or another way to diversify is to choose individual stocks, but also to buy a broader market ETF so that you get diversification through owning the broad market as well.
Okay. Were some tech stocks massively overvalued in retrospect? How could Korean investors have avoided buying massively overvalued stocks?
Yes, I think that there were parts of the market which were massively overvalued. And that's clear in retrospect. I also think that there were very clear signs of that at the time. We were basically in a market environment where money was free and where there was a feeling that there was no risk in the market. Real interest rates were basically at zero or below zero.
Right.
And there was a feeling that the Fed would, and the US government, right, would come in and backstop the economy and the stock market, almost whatever happened. I think that was the experience during COVID, with the big injections of fiscal policy into the market, the checks which were sent to people, and then quantitative easing from the Fed. Mm-hmm. And so we were in a market where perceived risk was almost zero. And the result of that was that stocks in particular, whose value was entirely in the future, meaning that they weren't yet generating, the companies weren't yet generating revenues or profits, but stocks where their expected earnings were many years out. When you're in an environment of free money, pretty much, and the perception that there's very little risk in the market, those stocks get bid up, probably disproportionate to their value, given that there should be a cost of money and that there should be risk in the market. And so what we saw in the second half of last year was very speculative tech stocks being taken public with SPACs, for example, companies with no earnings, with unclear business models, where they were giving long-term guidance to investors that they were going to experience tremendous growth with almost no factual basis for those forecasts. I think we saw very clear evidence of really significant overvaluation. What's interesting about the tech sector overall is that the tech leaders certainly experienced fairly stretched valuations, but most of the performance for a long time in the S&P 500 and the tech sector generally was driven by the largest companies, by Google, Apple, Facebook, Netflix, and these are real companies with real earnings, and their growth rates, to be quite honest, given the size of the companies, was astonishing. Right? I mean, just the compound growth rate that Google has experienced, for example, over a 10-year period in terms of its revenue growth is absolutely remarkable. And so I think that those stocks were expensive, but I don't think that they were in kind of crazy bubble area. I think the crazy bubble area was in the low quality tech stocks, the ones, that many of the ones that were taken public by SPACs and things like that. The challenge for investors is, as we talked about before, for growth investors, for investors in tech stocks always look expensive. So the key question is, how do you know whether your stocks are too expensive or not? And valuation is very difficult for investors. It's difficult for professional investors as well as individual investors. And there are lots of approaches that people use to valuation. For example, forward PE ratios or enterprise value to revenue.
Yeah, there's so many tools.
There's a lot of financial ratios that you can use. Many of them are not particularly successful for early stage tech companies. Like if you go back and you look at Google and Apple and Amazon, as I mentioned before, they now look really cheap over time because they compounded at very significant growth rates. And so those valuation metrics were not particularly helpful. I think what we've discovered is that really the best way to look at valuations is to compare the valuations of stocks with similar stocks. So what we've done on Seeking Alpha is we've introduced valuation metrics that give you a grade for the valuation of every single stock by comparing all of the valuation metrics of that stock to all of the stocks in the same sector. That's really important. And that way, investors can look at a stock and they can look at the grade for valuation for any tech stock in Seeking Alpha and immediately see what the valuation is compared to other stocks in that group. And I think that's a really important tool. It doesn't mean that you shouldn't buy a stock, which looks expensive. But for example, if a stock gets an F grade on valuation, I think that should be a concern, because that means that it's going to take a long time for the company to grow into that valuation and the risk is higher.
So now there are people who think that the time has come for value stocks to be more promised than growth stocks. What is your view? Could you share your view?
I think the first thing is that investors need to find the investing style which works for them. And there are different approaches to investing. And I think that if you have value investing in your blood, if you love value investing, then value investing is a viable investing strategy for you. But I think that, let's say, for example, that you love investing in growth stocks, that you're the kind of person who buys Tesla. I think asking yourself whether during this time in the market you should be buying value stocks, I think is very challenging, because it means that you go outside your kind of core area of competence. I think that one of the areas which you can do is, if you want to follow more immediate trends, you can look at which sectors have the most momentum, and you can buy the ETFs of the sectors that have the most momentum, or the styles that have the most momentum, like value stocks. We give quant grades to every ETF, so that you can look at the different ETFs. And that's a way, of saying, hey, how are value stocks doing? And should I be buying them? Do they have lots of momentum? And then I can buy them without having to become an expert in individual companies. As far as where value stocks are overall right now, I think that clearly there's been a shift as interest rates go up to stocks with current earnings, because with higher interest rates, it means that you're discounting future earnings more. And that's going to pull the market a little away from companies which are reliant on future growth to companies with current earnings. And at the same time, I think if you look at the parts of the market that are really working right now, it isn't value, it's specific sectors. So for example, the energy sector is up 40% year to date, right? And that's a lot more than value stocks on average. So I think that if you're an investor who loves tech stocks, loves investing in stocks like Tesla, I personally don't think it's a great idea to then try to become a value investor and pick value stocks. I think you can look, if you want to look at which styles are working, you can look at the ETFs and you can look at the grades that Seeking Alpha Premium gives to ETFs. And the final thing that I would say is I think that the market is really good at discounting things in advance. So, we saw that the market fell quite sharply in the first quarter, and the market was telling us that the economy was going to weaken before the economy weakened. I think that if you look at the gap in performance between value stocks and growth stocks year to date, I believe that the S&P 500 value index is only down about 6% this year. The tech stock index is down about 18%. The NASDAQ 100 is down about 23%. I would argue that you're probably late to the party for value stocks now. And so it's very easy as an individual investor to try to get into things after they've worked. And that means that you're buying high, and then you get out of things when they don't do well, and so you're selling low, and that isn't a great formula for doing well.
ETF will be a better way than investing in individual stocks under
these days or under these circumstances? What's your view?
I think it's really worth thinking about investing in ETFs generally, not just in this particular market environment. Again, the academic research suggests that individual investors generally do better by buying ETFs and holding them for long periods of time. And part of the reason, I think, is that it's easier to hold an ETF for a very long time than it is to hold an individual stock, because there's more noise around individual stocks and you can worry more about the company, and there's all sorts of factors. And also just stock picking, right, can be difficult.
Right.
And so given that individual investors do better when they buy things and hold them for a long time, there's a very strong argument for every investor that the core of your portfolio should be ETFs. At the same time, I think there's enormous value to individual investors buying single stocks and not just ETFs.
Many Korean investors invest in single stocks.
Right. So like, I know you mentioned Tesla before. Yeah. What are the other most popular stocks?
Usually, the Koreans do invest in the number one Tesla, and number two maybe is QQQ. That means 3X for the semiconductor things, and also another Alphabet and Apple like single stocks.
Yeah.
So we are really investing heavily in the tech stocks.
Right.
Yeah.
Right. And you know, I think that there's a very strong reason to do that. First of all, particularly if you buy the best growth companies and hold them for very long periods of time, you can really significantly outperform the market indexes. I also think it's just much more interesting, right, to research and to buy individual stocks. It can help you in all sorts of ways other than just investing. You know, when you learn about the companies, it can help you in your career. It can help you grow intellectually. And I think that investors can combine the two, and they can get the best of both worlds. So I think that you can hold market indexes, ETFs in particular, in your portfolio, and also buy individual stocks. What that will also help you to do is to diversify your portfolio, because, you know, as you're building up the number of positions that you have in individual stocks, you don't want to find that you've put your whole portfolio into only 2 or 3 stocks. That's too risky. So ETFs can help you to diversify there as well.
Seeking Alpha contains valuable information and data that are difficult to find elsewhere, really. I'm also a subscriber too, and what surprised me about Seeking Alpha was that it contained not only accounting information, but also archiving scripts from corporate conference calls that really surprised me, and down to the really smallest details. So Seeking Alpha is a very useful place in a market where stock prices more according to prospects from earnings announcements, as well as corporate performance like a fortress. What is the secret to securing such vast amounts of data? I really wonder, how did you get all the things out?
I think well, thank you. First of all, thank you for the comments. I think that part of it is just, what are you trying to do? What we set as a goal fairly early on, that we wanted to provide investors with all the tools that they would really need. And in terms of coverage of individual stocks, that means that you have to provide investors with data and charting and visualizations around the data, including grades, which are based on data, and ratings. You have to provide investors with news, and you have to provide investors with analysis. And we are literally the only platform which provides all 3 of those on essentially every stock that trades in the US. I think there are 2 other aspects of Seeking Alpha that we care a lot about, and that we think a lot about. The first is that we don't see ourselves only in the business of providing information. We think that community is really important, because we think that when you get very large groups of people together, there's a wisdom in the crowd which is much more than any individual. Most companies, for example, with investing newsletters have 3 or 4 people who write a newsletter and say we're smarter than other people. Our view is that if you really want to be smarter than other people, you have to get together a lot of people, and then the crowd has tremendous wisdom. So, for example, we show the average rating of all of our contributors on each stock, because that's already looking at the crowd of contributors and what they're thinking. And similarly, we care a lot about the comments on our articles. We're very careful about our comment community and making sure that our comment community is very high quality. So I think the second aspect is that we care a lot about community. And the third and final aspect of Seeking Alpha, and you touched on this when you mentioned conference call transcripts, the transcripts of companies' earnings calls, is my background is as a professional research analyst. And I used all sorts of tools as a professional analyst that weren't available to individual investors. And part of our goal with Seeking Alpha is to take tools which were only available to professional investors and give them at really accessible price and in a really usable way to individual investors. So for example, the ratings that we have on every stock, the quant ratings and the grades, where we give every stock a grade for valuation, which I was talking about earlier, and also growth and profitability and momentum and earnings revisions as well. That product was being sold to professional investors for $5,000 per seat per year. And we took that product and bought the company and put the product inside Seeking Alpha at a massively cheaper price that we felt was accessible to individual investors. So I think that the real answer to your question is we have a vision in Seeking Alpha that we want to give people the whole picture. And because we're constantly trying to do that, that's how we've managed to build up so much information on the site. The challenge, of course, is how to give people a lot without it being overwhelming. So we try to think a lot about how to make it very accessible and how to make it easy, so that if you want to look up a stock and just see the essential information about the stock in 30 seconds, that you can do that as well. And then if you want to spend 30 hours on the stock, you can do that as well. So that's what we're trying to do.
데이비드 잭슨 시킹알파 CEO와 함께 이 변동성 높은 미국 증시, 그리고 하반기 상승 가능성과 또 그런 가능성 쪽에서 우리가 어떤 태도를 가져야 할지에 대해서 이야기를 나눠봤습니다. 시청해주신 여러분 정말 감사합니다.